Alright, so this is a little recording of some trades that I took throughout this week, and a little review on why, how, when standard deviation is good. Let me just go to this single chart. Let's go to NQ. So we can start off on Monday. Monday offered a nice setup. So we zoom in here. We're on the 15. We have our midnight price marked out. Some liquidity resting below midnight. We swept that, and this creates this standard deviation, which I already had drawn out. And I want to talk about why this is a valid standard deviation. This is the last leg that manipulated midnight price. That's why. So midnight was created. We manipulated past midnight, sweeping out a low. That thus creates a manipulation and allows us to draw our standard deviation off of this. If we look at this projection, it was very accurate, as always. Got to -2.5, reaccumulated, drew back a little bit to the -1, where we then took off to the -4, reaccumulated, remanipulated pre-market lows, creating a 5-minute. There was a 5-minute SMT within this. Actually, it was up here. The SMT was between these two candles. I know that I just went over it. We gave a breaker entry. Boom, right there. Tap that, long it. We also, if we drop down to the 3, Monday. The Monday first presented gap is on my right here because it was so small. I used a line for this, but we held it perfectly, just perfectly. And my stop would have been right here, this low. It's that simple. I would have stabbed along off the first presented gap being held. Hold it up to -4, where guess what? The high of the day was created off the open manipulation at the -4 standard deviation. This happens constantly. Do not ignore it. And then you want to go call the low of the evening, we could say, because the new candle opened, the new daily candle opened right here. This. If we go in Y, this is an important level. 4 hour, or no, this was not a 4-hour candle. Drop in. Hate when I have to do this. This was Monday. Mark that. Go to 15. 6-hour candle manipulation with SMT. This whole thing was an SMT. ES took this high. I'm pretty certain. Let me double check. Make sure I'm not making stuff up. We did not create an SMT. However, I still would have used this projection because we swept out these highs. We left this, which I'm not too worried about the previous day high getting swept at 4 p.m., considering it's still that day. And this is the daily open right here. And then we distributed down to the -3.5. Happened again. We can go over one more. Let's go over this one. No standard deviations were really needed to take this trade. We after completing the -3 right here, which is this is the day that I was talking about where the SMT occurred across these highs. Therefore, this would have been your valid projection because we swept out this high. We completed -2.5, created an SMT. You can just tell that it's getting exhausted right here. I mean, whenever you have this smooth price action up, these smooth lows, these are usually good draws on liquidity. Even down here, I would call this a smooth low. This is a smooth low. So this is a nice draw. And after we had our manipulation, we can draw out our standard deviation. This happened at 11, so that would have been the 4-hour candle, the 10 a.m. 4-hour candle manipulation to the downside, where we completed our -4. I'm looking for a new standard deviation based on where I think price is going to go. We tapped into the NWOG. We also left an N dog right here. New daily opening gap, new weekly opening gap, in case you don't know what that is. After completing this, the standard deviation from previous day's manipulation, we're going to look for longs now. I personally am looking for longs and a standard deviation to the upside. I had to draw this on a bigger time frame because it was much more aggressive, because I think this was the war news. This was the war news, or Thursday was the war news. Nope, that's Friday. One of these days it was the war news. It's been going on all week. I can't even keep track. But this right here, confirmed breaker after this candle closes above. Yeah. Draw your standard deviation, project a breaker, measure the manipulation. It tells you where it's going to distribute. Where did we distribute? We left an SMT in the -2.5, where we then reversed. But let's go over why I took this trade. Drop into the 3-minute. Right here. Actually, we're going to drop into the 2-minute. Yeah, I took this on a 2-minute. So, what I was looking at going into today, open dumped straight into Asia and London lows, where we left an SMT. This is the sweep right here, the sweep ski, the liquidity sweep. This is very important. The candle that swept the liquidity left this fair value gap. I'm now looking for longs once this fair value gap gets inversed. This fair value gap gets inversed on this candle right here, the 938 candle. Inversion, we open, we tap into the first presented gap from this day, which was Wednesday, into the IFVG that I was waiting for to get inversed, stabbed my longs. I'm break even at internal high, fully out previous day high. No, this was Asia high. Fully out at Asia high. And as well, if we look, -2.5. Very important. Where we left an SMT throughout this chop, continued down. Another IFVG down here. And yeah, I think that's about all I wanted to cover. This is going to be the first recording I put into the Discord, so give me some feedback. I need to improve my video recording skills, obviously, but hopefully you were able to take something out of this. Remember, open, low, high, close, open, high, low, close. You're going to be looking for the manipulation of key time openings. What does that include? 6 a.m., 12 p.m., 6 p.m. Those are your 6-hour opens. Drop down to 4. You're going to be looking at your 6, 10, and 2. 6, 10, 2. 2, 6, 10, however you want to see it. Those are very important because each candle has open, high, low, close, open, low, high, close. AMD, accumulation, manipulation, distribution. You're going to be wanting to look for this on the lower time frames where your draws are going to be valid. So if you're looking at high time frame draws, say we're looking for this high to be taken and we're down here, we're going to be looking for some accumulation on the 15-minute, some manipulation, and then some distribution if we want to take out a high. And what you do with the standard deviation is you measure the manipulation. The measurement of that manipulation tells you how much the distribution is going to be based on the manipulation range. So when you draw out your standard deviation, you have 0 to 1. That's your manipulation range. 1 times that is just the same manipulation range. 2 of those ranges together, you pop them on top of each other, you literally get -2. It's an algorithm. The algorithm works like this. It knows it works like this. So you have to use, I don't want to say mathematical models, but essentially it's a mathematical model of how this works. Hopefully you guys see this and see the accuracy in it. Hopefully I can start making better, clearer videos for you guys, but this should be a nice introduction to this. So